Welcome to Get Serious. I know on Sundays, usually we're doing a mindset session. I wanted to update you on one of our deals, though. I just felt it was a bit more pertinent in this case, as we just got some up-to-date info on it. Now that we knocked out our absolute auction Tennessee deal against some of the most stressful weeks of my professional career, crazy story. You can see me report on it in previous podcasts. Also, the Get Serious newsletter, which is also on our Serious Land Capital website with all our past newsletters if you want to see how that went down. But because we ended up with a profit on that deal, obviously it was a huge relief. Thought we were going to lose tens of thousands of dollars on it. The other problematic property in our portfolio is another Tennessee property, though fortunately our basis on it was far less, around 5K compared to 93K on this one. Still a decent amount of capital, even if it's, when we were first starting this business, 35 grand into a deal was like, whoa, that's a huge amount of money to be putting into a property here. Whereas like now it's, close to our minimum that we would even consider. But nevertheless, you don't want to eat a loss if you don't have to. We bought this property when things were a bit slower. Like this was right around Christmas of 2024. And, we overreached on this one. So it was an infill lot, deep rural Tennessee. I mean, we're talking like right in between Nashville and Knoxville. Just not a ton of activity, but we thought, there's lake view for it. We're getting it at an attractive enough price, based on what we were initially seeing with comps and talking with experienced brokers. We could probably list at 70 with a decent chance of selling it there, but conservatively probably could exit for 55 to 60K. And we've just had barely any activity. We could have lucked out with this. Maybe we traded our luck with bad luck on this one for the other auction property, which was a worthy trade in my opinion. But we did have a buyer come in, a few months into the deal at 55K. That was going to be a quick 2-week close, and then just this nosy neighbor came out with who knows what type of motives and just said, yeah, this property is not buildable, which is just a lie. And the buyer got scared off. And really since then, we've had such tepid interest. And like I was looking at our listing, we've had 9 price cuts. Like it's just brutal over these past 6 months. And, even some more recent interest the last couple of weeks, just, the buyers just fell away, even though I'm like almost trying to give away this property at this point. Like I would basically accept almost any terms in the deal, and I've just tried every possible avenue, calling up local builders. You've heard me talk about all this, do the neighbor letters, and we've posted all across the different Tennessee land groups, different tactics on Facebook Marketplace. Our brokerage group is very solid. I really can't blame them for this one. Usually if there's a more troublesome property, you might be able to point to the broker. Maybe they're not that responsive. They haven't really pushed it appropriately, but the marketing photos are very solid. They're a they're a real professional group. Anytime I'll text, even though as their incentive to work with us has decreased steadily with a lower listing price, they still respond very quickly. And so I don't think this is a broker issue, whereas sometimes in the past, maybe yeah, it's time to move on to somebody else. They might be missing calls. That's not the vibe that I've been getting in this. It's just a really tough market. We just mispriced it. The price that we bought it at probably was going to be closer to market value, because again, we made just critical error of trusting price per acre below 2 acre. And we were right at the 2 acre mark. It's roughly 2 acre property. And just thought, hey, some of these half acres, some of these quarter acres are going for these prices. Plus, we have a little bit more superior characteristics, Lakeview. We can probably bump the price up a little bit more. Even though I remember back when I was first comping this deal, there was another property that was seemingly much more inferior, no Lakeview, much smaller, and it was sitting, I think it was active. I don't know. This has been a while. Either active or sold, but it was for 30 grand. And I'm like, yeah, that's a Not the best comp there, but I thought we had enough superior characteristics plus from the sizing perspective that it could have performed better. Obviously, that wasn't the case. Again, it's possible we could have sold it for 55K. We had a buyer there and it just bailed. But what can you do? It didn't actually turn out, so you move on. So we had been listing up to, down to 35, like right at that break even, but it's only break even from a gross perspective when you take into account commission and the holding costs on the deal. We're probably already 3 to 5K short on our original purchase price on the deal, and you take into account closing costs and so forth. So already a net loss. And I'd already been thinking, okay, do we need to try to fire sale this even faster here? Because the way that our business is oriented is usually like we get a profit, like a partner profit payout over roughly a year-long period. And we're anticipating, finalizing our harvest of our portfolio by end of 2025. So it wasn't necessarily hurting us to hold on to this asset for longer compared to if it was just the last remaining asset. And like, in order for us to profitably get paid out, like we have to move this one before we can close out the vintage, so to speak. So the dynamic was a bit different compared to last year, where in order to close out a vintage, we had a similar situation, like this 30K buy commercial lot that we thought was going to sell really quick, and it just lingered, and it was preventing our payout for much longer than anticipated. So it was a bit of a different situation. I don't want to eat more loss than needed, but again, there's no guarantee that us sitting on this for longer is going to change the results anymore. And who knows what, the macro environment could worsen, recessionary risk, etc. We don't know what could come up. So it's also like, there is some level of pressure to get things moving. Plus, again, it's an infill lot in a COVID boom area where builder activity is just decreasing, downward pricing pressure from the housing perspective. So it's not something I wanted to sit on that long either. So I was weighing all of this, and I was chatting with my partner today, and we had used a technique earlier this year for a different infill lot in Georgia, where we took it off the market for a couple months. This was in the middle of winter, and then put it back on in the start of buying season, and we got a new buyer like very, very quickly after that, and had a nice profitable exit. For that one, actually an owner financed a sale, and we just sold a note at table close, but still a nice profit for us to get out of that one. And it also helped reset the days on market timer. So we thought, okay, let's just try doing that again. We have like a nasty situation, right? 9 price cuts, like it's brutal for anybody. Sorry, I'm reorienting myself because my recording stopped. So we're going to have to splice this in, but it should still work out. Forgive me if there was a little bit of a blip that just happened before these last couple sentences. That's just what happened in the background. But we soldier on. And I reached out to the brokers about that and said, can we try taking this off the market? I know every area is different. Before you can reset the days on market timer, some might be a few days, some might be 30 days-ish, usually no longer than 30 days before you might get penalized by the MLS or whatever. So they said they're currently on 3 MLSs in the area, which is solid. Yeah, you always want to be on as many MLSs as possible. And they said, the main one is only 5-day turnaround to reset the days on market timer. Another one is like 31 days. And so I was asking, okay, should we wait until all the timers are up to post it across all the MLSs again, or can we stagger it? The main one that's in 5 days, can we repost it? And the other one as it comes up. And they're like, yeah, in our experience, yeah, you can stagger it. This technique has worked on occasion, like it's worth a shot. To reset the timer here. Plus, I also inquired, can we do a new set of photos? Again, I would hate throwing more money at a deal that we're already losing on. But at the same time, you got to pull out all the stops to wonder, okay, what else should we try to avoid losing as much money as we can? And so he said, yeah, we could take some more drone photos, $120. I'm like, yeah, that's pretty nominal. Let's do it. The first set of photos that we got was done during the winter, so there wasn't much foliage around, bare trees. So now we can get some greenery around. It'll just freshen things up from a visual perspective. Let's try it. I think we did that with that lakefront lot in Georgia as well. As far as strategy, And so, again, credit to this brokerage group. They're like, yep, we already got this scheduled out a few days from now. Here's your release form. And here's like the new form to sign up for, re-uploading to the MLS, all taken care of within a couple hours. Again, these guys are on top of it. It's just a really, really difficult property. And they could have given up on it like after the first 6 months. They're like, yeah, this is just not worth our time anymore to work on this one. Their incentive is like super low at this point to do this deal. I've tried renegotiating the commission. I think I'm going to get it down to 4% compared to the initial 6%, just given we've really struck out on this deal. And then I was re-looking at comps, and there has been some activity within the last few months, even post-trade war, like May 2025 sales. There was a 0.4 acre ish that sold for about 25,000. And I think there was another one that sold for that. It was a more inferior lot. There was a lakefront lot that sold for like 45 grand. Then a campground lot nearby that I think sold for like 70 or 80. It's just like a different type of property, though, hard to actually consider as a comp. So I'm like, looking at all of the, plus there is an active lot that directly touches ours. It's a half acre that's listed for 25K. That has not really gotten that much activity, and it's worse position than ours. So I'm more of the opinion at the moment that 25K probably will be our bottom here. It's just, it's going to be a 10, 12K loss that we're going to have to eat. But nevertheless, like we have to get this one to move. And so also when we relist on the MLS, I dropped it another 5K. I'm like, we've been listed at K or just under 35K for probably another 3 weeks or these past 3 weeks, and just still nothing has really happened besides like one pretty tepid buyer. So let's just drop it again. Like we got to figure out where is this market to actually move this thing one way or another. And so we're getting awful close, right, to, a half acre that's worse than ours listed at 25K. We're going to be very close to that price point for 4 times the acreage. So, just undercutting, trying to stay ahead of the market. Plus we'll have that fresh days on market timer. We'll see what happens. But overall, my decision making too is, again, after the trade war happened and the macro just got tougher, and our growth trajectory for this year just had to get reframed a bit, is like these much larger deals that we're doing, the 50 acres in south of Dallas, Texas, that's like, near $1 million deal. And then this other larger minor subdivide in Louisiana. Those are going to drive most of the returns and setting up our business to the next step. That I have a much larger growth expectation for like 2026 and beyond that we're trying to set up. Is just like I have to be patient in the meantime. And all of these other lower value deals that preferably I'm just not going to be doing anymore going forward. And we would just have a much, obviously I don't want to lose money on any deals like this one, but just trying to offload and get as much cash back as possible. Like I would be okay just breaking even on these lower ones. If we get good results for those much larger deals, like that would be a very, very good result for this year in a pretty difficult economy and macro. So I'm looking at that auction deal that we surprisingly got a profit on. Even if we have to eat a bit of a loss on this other Tennessee deal, like if that equates to a break even across both of those, like that is still a fine result for me, because I was expecting to lose money on both by quite a bit. So that would still be a significant win to get out of 2 of the nastiest properties that we've ever held in the history of our business at roughly a blended break even. So just to share a bit of my thinking there, how you might look at your own portfolio. Maybe you got some tough ones to move to. I've never met a land investor who hasn't come across a tough situation before, or you haven't been in the game that long, but this is how we're trying to solve problems. So with that in mind, seriousland.capital for any of your funding needs, Land Daily Diligence Facebook group for zero cost review of your land deals, and landpricer.ai for the most reliable land pricing tool on the market. Pushing on the product side for that. Looking forward to delivering it to you all. Subscribe and share. Talk to you next time. Bye.